Hello. Hello, everyone. Hello. This is Charlie Tian. I'm the founder and CEO of GuruFocus. Um, Tomorrow will be the holiday, so today is kind of slow, but let me know you're here and let me know where you are and say hello to me. I want to see your names and where you are. And I'm in Texas, in Plano, Texas. The temperature is now about 100 degrees Fahrenheit. It's extremely hot. Actually, the summer just started, and it's just getting started. We will have 3 months of very hot weather. And yeah, let me know where you are and say hello to me. I'll be very happy to see some familiar names again and some new friends again. And hello everyone. Yeah, see from different places. Thank you. And that really makes me happy. Today, we know that market closed already. It's a short trading day, and the stock market has been doing extremely well. The S&P 500 is up 16%, more than 16% already. And we don't know, we never know where the market will be, but I want to share a few things which I was observing during the month and which kind of concerned. And again, while I'm talking, feel free to ask me questions anytime, and I'll be glad to answer your questions anytime when you when I get a chance. And so first, I said that the market is at 16% already today. So I'm sharing my screen with you, and a few things on the homepage. You can see that this ST500 GF value. It's our way of estimating the market valuation. If I click on this chart, you can see that this is the market valuation in our in GuruFocus valuation. This blue line is the SP500. This dark, thick black line is where we think the fair value of the market is. So if we look at this chart, the market is about 12% overvalued, seems like. And if we look at historical values, historical charts over the last 20 years, and the price lines, this price SP500 line is fluctuating around the fair value, and sometimes it's above it. Like by I think the maximum we was observing was the SP500 was above the fair value by about 30% here in around 2020 21 before the market crash. And then there were a few times during 2014. 2014, the market was about 20% overvalued. And in 2008, actually, was only slightly overvalued, but then it crashed. So now the valuation is certainly at a very high end of the valuation, historical valuation. And but well, does that mean the market will go down? No, it doesn't. And first, of course, it depends on lots of other things, the interest rate, the economy, a lot of things. And but I want to remind you that the market is overvalued, and historically, we rarely see the valuation higher than this. Maybe another 10% will be reaching the upper limit, I will say. So, but I don't know where it will go. Certainly, I don't know. So feel free to ask me questions, and whenever I get to it, I will answer your questions. So let me share a few other places where we discuss about the market valuation. Of course, the most well-known one is the Buffett Indicator. The Buffett Indicator is saying that the market is now significantly overvalued, and it's using the total market cap over GDP, the ratio of total market cap over GDP, which here you can see that the blue line is a total market cap here. And the GDP is this green line, and if we calculate the ratio of them, can see that it's this green line here on this chart, and then currently the ratio is sitting at about 200%. And historically, there are only once the ratio was that high. It was before the crash of 2021. And if we consider the Federal Reserve balance sheet, the ratio now is even higher than it was in 2021. So that's where we are. The valuation is just is really high. And if we think that the Buffett indicator is still relevant, then the projected future return is very low. Will be around 0%, around no return in the next 8 years or so. That's what the Buffett indicator is saying. And similarly, we have another indicator which is called Shiller PE, which is developed by Yale professor Robert Shiller. And the valuation measured by Shiller PE is not as high as 2021, but it was only lower than the 2021 peak, and every other time, all the other times are the ratios, the PE ratio was lower. And from this, we can still also calculate the implied future return. The implied future return is just 1%, which is similar to what Buffett indicator is telling us. So all the indicators are telling us the market is overvalued. And so where will it go from here? And I don't know, but I think that the market is still very optimistic. The economy seems fine. The interest rate will not go up, seems like, and most possibly it will go down some this year or next year. So that's good for the market. But on the other hand, that's probably already priced in the market. That's where we are. Okay, that's about the market valuation. Let me see what questions do we have. And okay, editor picks search function. Okay, we'll consider this feature, and so it's not a question. What the fundamental American especially is about the possibility fund. I'm not sure, Ali Riza, what your question is. Can you repeat your question? Okay, H2W is asking me about the interest rate, the chance of interest rate cut next two meetings. I'm not an expert on this. I'm not an economist, but to me, the chance of rate cutting is small. It's really small. And because economy seems fine and the inflation is going down, although it's going down, but there's still high national debt and still risk of the inflation coming back. So I don't know, but I think the chance is small, but don't quote me on that. Okay, that's about the market valuation. Yeah, we still see quite lots of people today. That's great. I'm so happy with it because tomorrow is a holiday here and today is a short trading day. Okay, now let's go to where we have been doing at GuruFocus. We have always been developing new features and adding new tools and new data to the website and hoping to make your research easier and help you to reduce the chance of making mistakes. So let's come to our changelog. Our changelog is under tutorials, changelog. Here we always list what we have been adding to the website. Okay, the latest one we added is this. For every stock, for instance, if I go to any stock, we added a filter here. Which tells you which uh, uh, which scanners does this stock appear in? So for instance, here Microsoft appear in high quality scanner, high quality low capex with ROE and ROC minimum requirement, and high quality and low capex, mega caps, profitable, predictable margin expanders, the stores. This is a Peter Lynch term, predictable growth companies. So Microsoft is appearing in all these scanners. If I click on any one of them, for instance, profitable, predictable margin expanders. So if I click on this scanner, it appears here. So the filters are already set already. Filter is set already. There's some customized filter also. So if we come here, it will show you all the companies that satisfy this margin expanders. The margin expansion is actually a very powerful, powerful tool, very powerful indicator that the company is doing well. And if I remove the if I remove the, I just display the home exchange. So I remove all the ADRs. And so yeah, again, I load up this screener and you can modify it. You can modify it based on that, and then you can save it. You can save it just by clicking on this save button here. You can save it as your own screen. Next time you can come back and it will show everything that satisfy this satisfy your screen. So it will load up everything and your screen results will appear automatically, because this screener is called margin expanders. So the companies are having profit margin expansions. So let me show you some tools here. If I click on the chart, you can see that it shows for all the companies the chart related business chart, business of operating results, the revenue, the income statement breakdowns, the valuation, and in this screen. And actually, if I look at let's look at the performance of if I just click on price of this screener, and to see how the stocks have been doing for this screener. And because there are lots of stocks, so let's wait a little bit until it loads. Yeah, now you see it loaded. If I just look at year-to-date performance, and the year-to-date performance seems like most of the stocks are doing pretty well. And in this screener, some are not, but mostly are doing quite well. In this screen, of course, NVDA is in it. Some semiconductor chips. This is called Old Freight Lines. That's a very traditional company. And NVR, home builder. That's so that's a feature I was talking about for every stock. If every stock, we now have here it shows where this stock will appear in which screeners. That's one feature we added. Another feature we added, if we come back to the changelog, is that we now support quarterly data for historical filters in all-in-one scanner. So now if we come to all-in-one scanner, if I come to all-in-one scanner, and the historical data screener is this plus sign. If you look at this, actually, I got quite some questions on this. Our users want to screen with the historical revenue data, for instance, historical earning data. They want a company that can grow revenue every year, year over year, every year. So not like some will also have a high growth rate, average rate of growth, but some years it will decline. And for earning per share also. So where I need to find this earning per share filter, I don't know where it is. I just search it. Okay, it helps me find where the earning per share is. So the company let's see, we require the company for every year over a year from 2003, 2000, from first 2020. I just use a shorter period. So the company can grow the earning per share for at least 5% year over year. And let's see the results. Okay, we got 98 companies, and so it's still loading. We got 98 companies for this. So the company that can grow their earnings year over year for at least 5% a year. So it should be loading faster than this. I'm not sure where it's kind of slow. Let me redo it. So earning per share from 2020 grow at least 5% a year. And okay. It should be loading as this area historical earning per share. So give the results already. We know that there's 98 companies, but somehow the earning per share kind of loading is slow. Okay, Sydney, can you ask down to say why it's loading slow? But okay, a feature we added lately is that we not only now support the annual data, we also support the quarterly data. That's a new feature we added. Support quarterly data. For quarterly, there will be two cases. So you want to compare the same quarter of each year, or you can compare quarter after quarter. So it's one, so the quarterly data, but compare year over year. And the other is quarterly data, but compare quarter over quarter. So there'll be two options. And we just use this from 2023 Q1 to this year Q1. It grows year over year by at least 5%. So we're comparing quarter over quarter. So that's a feature we added lately. And you can also compare quarter over quarter if we just change this option. It will compare quarter over quarter. So that's a feature we added. Okay, let me see if I have more questions. Yeah, that's for the all-in-one screener. Yeah, the quarterly data was loaded, but somehow it's still spinning. That's a feature we added for the all-in-one screener. Another feature we actually added. Okay, let me go all-in-one screener. We added, which makes it very powerful. I talked about it last month, but now I will show you again this month. And it's called load from portfolio. And so you can what you can do is you can find, for instance, you can find the intersection, all the stocks that are in both S&P 500 and the NASDAQ, for example. The intersection, the stocks in these two indexes, and then you can filter based on among those stocks. And it can also be your own portfolio. It can also be the Warren Buffett portfolio and other gurus' portfolio. So you just search in this. For instance, you just search Bill Ackman here, and you'll be able to filter the stocks that are among both of this, both in S&P 500 and in NASDAQ, and also in Bill Ackman's portfolio. Okay, we just found one actually, a Google. Google is that satisfies that requirement. If I remove the NASDAQ requirement, and okay, we found three stocks. One is Chipotle, and Hilton, and Google, Alphabet. So these stocks satisfy requirement that is in both Bill Ackman's portfolio and in S&P 500. So, and of course, you can also put your own portfolio here just as a choice, and it covers the ETF, covers mutual funds, and all of this. once you do this screen, you can do backtesting. You can show the chart. Can show chart here. If I just look at the combined chart or the GF value chart of these stocks, or they all look this Google and CMG both look overvalued, and a bubble chart. So there are lots of options. You can do backtesting. For instance, some people are interested in, if I remove Bill Ackman here, remove him here. Some people are interested in the backtesting of this for the stocks that are both in NASDAQ and in the SP 500. For instance, if I search NASDAQ, constitutes NASDAQ. And if I go to the active filters, and I found the stocks that satisfy those needs, and then I can do backtesting. I can do backtesting from 2021 to now. I rebalance every 6 months. If I do a market cap weighted, so a weighting that is market cap weighted, if I do a backtesting, I will show you the results. Okay. And I'm talking a lot. In the meantime, if you have questions, please feel free to ask in the chat area, and I will certainly go to the questions after I do some. I finish this part of the talk, and so what I'm doing is I'm doing the combined portfolio, the intersection of SP 500 and the NASDAQ as the top 10 companies. And if I sorted by market cap, but from small to large, look at the performance. The performance action is market cap weighted. It's actually not doing well lately because I'm doing a market cap from small to large. If I do a market cap from large to small, and let's try again, I'll show you. If I do a large to small for top 10 companies, you can see that Apple, Adobe, Amazon, all this are now appears, Microsoft, NVDA, PepsiCo, Tesla. So all appears, and I will show you the results. This is market cap weighted, but market cap rank from large to small, and we can see the results after a little bit after the backtesting is done. Okay, the results is here now. You can see this thicker line. This thicker line is the performance of this portfolio. It has been doing extremely well, and cumulative from 2021, it almost doubled. SP 500 gained 54%, and NASDAQ gained about 60%. So it outperformed both SP 500 and NASDAQ. And this year, it gained 35% already. Last year, it gained 73%. But it has higher beta than the NASDAQ index, for instance. And you can see that in 2022, it's down more than the SP 500. It's down 39%, while the SP 500 was down 18%. And NASDAQ was down 32%. But overall this year and overall in the last 3.5 years, it almost doubled. It has more volatility, but it certainly has higher returns. Okay, that's a backtesting feature. And so what, in summary, I summary a little bit, we're talking about the historical data filter, which you can filter with historical data. You can require year-over-year data requirement, and also you can do backtesting on the combinations of different portfolios. Once you use this load from portfolio or index membership, you can do both of this. Let me look at the questions. Okay, stock financial information. Okay, Lisa is asking, JP Morgan, stock financial information. What is the question? Okay, Amit is asking, are we planning to change the look and feel of the website? Not really, but currently we provide this two modes. One is this normal regular mode. The other is a dark mode. You can just click on this here. You can click on the half moon here. It will go dark mode, and that's the two mode we're providing. We don't plan to change the look and feel. We rather spend more time on the features, on the data, instead of changing the look and feel. Although it's important, but we rather spend more time on the data and on the usability and on the features. Also, change the look and feel of the entire website will be extremely time consuming and cause lots of problems. Okay, Reza is asking JP Morgan. I'm not sure what question you're asking, but yeah, we can look at the JP Morgan financial data. If you come to JP Morgan, of course, you come to this summary. You can come to this summary page for financials. Then you can click on the third-tier financial tab. You get all the data. For bank, it's a bank because JP Morgan is a bank. The income statement format is different from like Microsoft or Apple. You can see that there's interest income. That's for bank because it's a bank. So their interest expense. JP Morgan as a large bank is not paying much interest. If you have an account there, and we have an account there. If you have an account that you know that they don't pay much interest to your cash holding there, but they're gaining lots of interest from by holding your cash and investing your cash. That's why if you look at it for JP Morgan, their interest income gained a lot, grow so much, doubled compared with little over less than 2 years ago, actually. Tripled, more than tripled from about 3 years ago. So their interest income tripled. The interest expense, of course, also increased because although they don't pay interest, probably these are the CDs. They don't pay interest on the regular checking account, saving account. Doesn't matter how much money you have there. You park your money there. They don't pay interest, but they have to pay higher rate on CDs. But still, look at their interest income. Net interest income has been increasing. They benefit from the higher interest. And the non-interest income also increasing. Yearly, it's a processing fees, a credit card payment fees, things like that. So the revenue gained growed a lot. If you look at the revenue of JP Morgan, it benefited from this interest rate increase. That's JP Morgan. And so that's why if you look at their net income actually increased quite a bit compared with a few years ago. And so let's see their stock. They gained 21%, which is not bad at all. Okay. I hope that I answer your question. Still, in my opinion, is currently leading the Dow Jones. Okay. Yeah. Okay. I think I agree with you, Doug, Reza. Yeah. JP Morgan is probably leading the Dow Jones market because Dow Jones index does not have lots of technology companies. The weighting of technology companies is small. That's why the JP Morgan is up 21%. That's pretty good. And let's see a little better chart. JP Morgan. And this year, if we just look at last 3 years, actually stock didn't do as much. Let's compare with Microsoft, just for a random comparison. And Microsoft certainly do much better. And this year, okay, they're about the same. This year, JP Morgan and Microsoft has been about the same. Both are the largest companies in their own industry. Okay. Okay, let me look at Hunter question. Can there be short-term debt and long-term debt interest expense least manual stocks? Yeah, I think that we can. Do we have those already? Let's see. Okay, because you're asking about manual stocks, most of the users probably, lots of users don't know about our manual stocks, and it's actually called okay. It's a manual stocks here. If I click on that, it should appear as a PDF file. It should download a PDF file, which is okay here, which is a PDF file, which you probably cannot see. Let me show you a. Oh yeah, you can see it. So it's a. Let me show you anyway. I show you HTML version of it. HTML version. This is HTML version. It's called stock PDF here, and Hunter is talking about this area, I believe. The balance sheet, the long-term debt, short-term debt, and yeah, we do have long-term debt, short-term debt here for the balance from the balance sheet section. The interest expense, not total non-interest current credit loss provision. Yeah, interest rate expense is not here. We can consider it, but we need to make sure that this page, because it's quite tight already. We need to make sure that we have enough space for that. Okay, thank you for the suggestion, Hunter. And I will record you. I will write down your request, and we'll consider this. We'll certainly consider your suggestion for the. Okay, let me look more. In the part estimate section. Okay, that's a good question, Brainstormer. Thank you for asking the estimates. And estimate section is is the third tab we added to this stock page. If you look at the summary, the 30-year financials, the estimates. If you come to here, and now I'm on JP Morgan, and this is the first chart. This is the stock price. This is the analyst projection of the stock price. There's high, there's low, there's average. And we also list our GF value here. In the case of JP Morgan, seems like the 12-month target of the stock price is the same as it is now. So they're projecting that JP Morgan, on average, JP Morgan will, return will be zero over the next 12 months. And it's from 27 analysts, the opinion of 27 analysts. And then we can look at the numbers, the projection of the earning per share, the key numbers. One's earning per share projection for, these are the historical numbers we list here just for your convenience. And these are the projected next 3-year annual data. And these are the next 3-year next 8 quarter data, 7 quarter, sometimes 8 quarter, sometimes more. The annual data, and you can see that the market is projecting the earning per share of JP Morgan will not change much over the next 12 months. That's probably why the stock price projection is not changing. Also, they're projecting next year the revenue will not grow much. That's for the JP Morgan projection. And this section is a surprise or miss. History review for the last 5 quarters, and this gray circle is a projected earnings per share, and then this green dot is, or red dot is a reported earnings, the actual earnings per share. So when it's green, it means it beats the estimates. When it's red, it means it missed the estimates, and that's the effect of the stock price due to this surprise or miss. Not always beat the market will get upside. For instance, this one, the latest quarter, JP Morgan beat the estimate by almost 8%, but stock was down. Because it also sometimes quite a lot of time depends on what the CEO or CFO are saying, the projections for the future. And so for revenue, actually, JP Morgan has been beating the revenue. And the analysts, if you look at the analysts for the 2025 projection, analysts actually recently the projection is going down, although the projection for 2020, quarterly data, about a year from now, the projection is actually going up. But by the year end of 2025, the projection is going down. And you can look at this for revenue projection for JP Morgan has been going up. That's actually, if I show you NVIDIA, it's more stock comparison. If you look at NVIDIA, the estimate data, has been adjusted, always adjusting higher. So the analysts keep getting more optimistic about NVIDIA's project earnings and the revenue both. Those are the quarterly data. If you look at annual data, if I just click on that on annual data, so the analysts are more and more optimistic about NVIDIA's earnings and the revenue. So they're adjusting their estimates up. That's the estimate trend, and I think it's a useful information. And then here's more detailed data on how many analysts are carving the estimates, the high and low for different parameters. But I think the most important ones are this one, the future estimates on average, and also the trend of the estimates. With a trend, you will know that whether the market is more optimistic about the stock or not. And when the estimates keep going up, it's good for short term, for short term stock prices. And when analysts adjust the estimates up or raise their target, the stock price will go up, at least for short term. But for long term, not necessarily a good thing, because when you have the higher expectations, the company has a harder time to beat the estimates. So, and when the company makes the estimates, the stock price will be punished dramatically. So short term is a good thing, long term not necessarily. But do consider this as one of the information you use when in your analysis. So that's about estimates. Any questions about it? Let me look at the question. What's the intrinsic value of NVIDIA? Oh, I wish I know. I wish I knew NVIDIA's intrinsic value. But we always look at our GF value. I always look at our GF value, and as a reference. I think that's a GF value. What I'm talking about here. So we're seeing that NVIDIA seems to be very overvalued, significantly overvalued, because the stock price now is above the intrinsic value line by about 30%. So it's dramatically overvalued, but the growth is also dramatic. The stock, the revenue and the sales and the income is expected to grow very fast. So the intrinsic value is probably higher. It deserves to be traded higher at higher. So the intrinsic value 120, yeah, maybe higher. I don't know. But we know that the market cap is now 3.16 trillion, and only slightly lower than Microsoft and Apple. So it's kind of high, I would say. And in my experience, 20 years experience, many years experience, observation, and usually the top market cap companies are the companies that have direct interaction. Their product have direct interaction with a large quantity of most of the consumers, like Microsoft. Almost everyone's using their product, like Apple. Almost everyone's using a product directly, using their product directly. I'm talking about Google. A large percentage of population use their product directly, but with NVDA, no, we don't touch their product. We don't. We know that it's used in different places, in some gamer computers, in clouds, and we know in AI, but we never touch the product directly. So that's a very rare case that company like NVIDIA that produces this kind of product, which does not interact with consumers directly, still get this high of valuation. And so that's a rare case. Of course, the disclosure, I do own NVIDIA in my personal portfolio, also in the fund that I manage. So as a disclosure. Okay, let me look at more questions. Michael Philip is asking, what do analysts' recommendations coming from? Okay, the data is from Refinitiv. Data is from Refinitiv. I think Refinitiv is part of Capital IQ or they merged, something like that. I hope. Okay. Feel free to ask me questions. We don't have lots of time left, and I have been talking about the screeners. Yeah, you do need to use more use more. I encourage you to use more use more of our screener, and it's really powerful. And also use more about our chart. Use more of chart. The chart is so useful. Anything you can draw, anything you want to draw, you can do it almost everything. The P ratio, the PS ratio, and the GuruFocus ranking, such as GF score. You can draw the historical GF score of a company here. You can draw it here. NVIDIA GF score. You can draw the profitability rank, almost everything of it. If I remove stock price, you can draw the income statement data. You can draw like the revenue and the net income, almost everything. Really, literally everything. And if we don't have the item you want to draw, you can create your own. You can create your own customized data here, just by creating a formula and with the parameters you want to use, and it will draw the chart for you. And now we also added Guru data here. You can draw Guru data here, number of insider buys, number of Guru buys, for example. You can also draw the technical chart here. And you can also draw the economic data here. economic data, for instance, you want to draw gold price together with NVIDIA for whatever reason. You can just search here, gold price. Gold price. Okay. Gold fixing in London. Okay. So now I have the gold price here, which is this line. If I remove some lines so that it doesn't confuse with what we're remove the profit rank, remove revenue. Yeah, you can draw this is gold price compared with the NVIDIA stock price, just for whatever reason you want to do it, 15 years, 10 years. You can also draw the industry valuation data. That's what we add lately, for instance, because NVIDIA is in technology field, control its technology industry PE chart here. If I remove the gold price, and also I remove the P ratio, no, I remove the stock price, but I draw P ratio of NVIDIA. So you can compare the technology NVIDIA P ratio with the industry P ratio and get some idea of what's going on. So that's a very extremely powerful chart. Okay. Brainstorming is asking, when do I intend to sell NVIDIA? Not yet. I think I don't know the exact. I don't know the future, but at least now I think. Yeah, valuation is high, but growth is still high, so probably justified. The entire everything the valuation is high. Even Microsoft is traded at around 40 P ratio of 40. That's high. That's really high. But is it like a dot-com era? Not really, because if you look at the P ratio of dot-com area of Microsoft, if you look at the P ratio of in the since 1995 for Microsoft, the dot-com era, the P ratio was much higher, was about not double, but close to double during the peak. It's double what Microsoft is so today. And Microsoft has been always a good investment. And so a strong company. That's so I don't know. Okay, BK is asking, do we plan to develop an AI chatbot to query and accessing financial info? We have that already. We have a beta version of that. It's under tools. It's under tools called GuruGPT, and you can see it here. For instance, you can ask questions. So now at this point, we're still working on it. It's a beta version, but you can ask questions. For instance, what are the comparable sales of Walmart? Just how Walmart sales are doing. So I asked it. I typed the question, and you can see that it's thinking now, searching for the data, and it will answer you. Okay, the data is actually from the 10K of the 10K of the company. So it tells you Walmart. Okay, Walmart US has been doing this much. Sam's Club, Walmart International in different segment of the UI of Walmart. The comparable sales have shown consistent growth over the years. Sam's Club has a steady growth in sales. So you can refine your questions, and let me see. Please give me the comparable sales growth of Walmart. So I refined the question. Let's see. So we have this GPT link. It's under tools. It's under GuruGPT. It's under tools. It's under tools now. Okay, it tells us. Okay, now this time I ask a better question, so it answer a better. So answer better. It says comparable sales growth equals current year sales subtract previous year sales divided by previous year sales. So it's telling us that with this calculation, the comparable sales in 2022 is this much. Why it doesn't give me a data? Now let's calculate comparable sales growth percentage sales data. Okay, it gave us all the formula how to calculate it. It didn't give me a, maybe I should give me both. So growth rates of Walmart in percentages. So you can do, this is a ChatGPT 4.0 engine behind it. And yeah, now this time it gives me the growth rate, comparable sales. So in in Walmart US, growth was about 6%, and Sam's Club 15% in some places, and Walmart International declining. So you need to refine your questions and ask good questions. But we are still working on it. We'll make it better, feed more data to it, feeding the transcript, for example, feeding transcript to it, feeding 10Q, and our own data in it. So yeah, please keep using it, use it, and give us feedback. We want to make it better. Okay, PK is okay. Let me ask: is there a place where you can see historical average performance per month, for example, SPY? Yeah, SPY. Let's see SPY. Well, I don't think you can see the historical monthly data for the ETFs, but you can see the historical annual data, for example, SPY annual data is here, and this is SPY compared with QQQ. You can, of course, add other ETFs or indexes here, and add things. And you can just add other things here. Then add AVGT, for instance, you can add it here and to compare. And once you add the annual return will be listed here also, and annualized return also annualized average return also listed here. Among these three, VGT seems to be doing the best. And we also show some data on the valuation. Okay, MAGA 24. Okay, seems like a MAGA Trump fan 24. Okay, good stock return in next 3 years. Yeah. It's of course we are trying to find a stock with good returns for the future, and but it's never guaranteed. Statistically, some stocks will do better on the next in the future. And what are they? They are actually just with one parameter, the ones with higher GF scores. We have done study. We found that the stocks with higher GF scores will tend to do better over the next 12 months. So if I just get a stock with higher GF score, and if I don't want the OTC, if I just want the stocks that are traded the primary market in the US, you can see some of the stocks here. So ADDX, ResMed, some possibilities. And we do have a model portfolio for this. It's under model portfolios. The stock with the highest GF score is here. And we started this model portfolio not very long ago. It was started in May of 2022. So it's a little bit over 2 years now. So it outperformed market by this much, and it has been doing pretty well. This year, I think it's about slightly better than the market, or even. But overall, it has been outperforming the market. So stocks with high GF scores and tend to do better, if you ask me. But it's not guaranteed on individual stocks, but it's statistically it may. I would like to, okay, Gerardo asks, I would like to identify which months are positive or negative for the last 10 years. Yeah, we don't have the data. For the last 10 years, we have a place which show you a general market, not the individual stocks. The general market is actually, and it's kind of the presidential cycle. This page, I'm not sure if you know it or not. We added this year. So I showed you the historical presidential cycle of the stock market. It shows months too. For instance, this year is the fourth year of president, fourth year. And now we're in July. Historically, July, fourth year seems to be average pretty good. If you look at last 30 years, okay, at least it's not bad. And June wasn't bad either. The worst months will be September and October, just before the election. So those are the worst months. August seems to be pretty good too. But September and October seems to be bad. And now if we, of course, you can select, there's Democrats and or with Republican. For instance, this is the Democrats and Republican were separated. Year 4 for Democrats in different sectors seems to be always good, but for Republicans, not so much. So that's some historical data. Historically, year 4, Democrats 77% going up, and Republicans 75%. But they're all average, all going up, and so that's some statistical data. I'm not sure how useful it is, but it's just a parameter. How often do we update GF value? We update at least weekly. Hello, Charlie. Hello, Helen. Thank you for saying. Thank you. Yeah, May still this year. Okay, what's the best method to determine the percentage of a new investment in your portfolio? I think it's brainstorming that. I think it's a level of confidence. And level of confidence is the most important thing. How much confidence you have. If you have higher confidence in your research, you'll probably want to put a higher percentage. If you don't have that much confidence, you probably shouldn't invest at all. But it's the level of confidence, I would say. Can you create a customized chart with certain attributes, for instance, PE, quarterly, yearly basis? The PE yearly basis, that means the average PE, because PE ratio changes all the time. Quarterly basis, we have that already. It's under the 30-year financial page. 30-year financial page, PE ratio. Yeah, the PE ratio here. Listing 30-year financial page. These are actually the average data. Although the PE ratio itself is actually daily, but we list here is a quarterly data. Here is annual data. It's not average annual data. It's the end of the period, the data on that day, end of period. And here is quarterly. And not sure how useful that is. But you can For valuation, you can always look at the current valuation here. For instance, P ratio, where it stands versus the industry versus history. You can see that if you put your mouse on it, we'll show you it's NVDA, it's worse. The P ratio is worse than, is higher than 77% of the company, and historically, it's actually, it's also the historical median is 46. Now it's 75, so it's very high. That's how the data should be interpreted. Okay, we are running out of time. Thank you all very much for coming, and hope to see you again next month. The next meeting will be August 7th. Wednesday, always Wednesday, 1 p.m. Central Time. So the next meeting will be August 7th. And in the meantime, wish you a great holiday tomorrow and happy Independence Day. Thank you all very much for coming.